Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor.
And welcome back, everybody, to the Standard and Rich podcast. Of course, this is your host, Jonathan Elkoubi speaking, and we're joined today with Danny Gallo. Let's start off this segment with the market news segment. Danny, what do you have to say about the market news?
Well, obviously, this time of year with these companies, we can't deny that the biggest market news last week, this week, next week are obviously the stocks reporting earnings. Some of the stocks we talked about last week that we were looking at did report like Tesla, which, full disclosure, me and Jonathan do own.
Full disclosure, guys.
Full disclosure, do not forget that. So Tesla did report earnings, and as I said last week, the most important part weren't the numbers that were going to come out from Tesla, because they did miss on revenue, they did miss on EPS, they missed about on even on free cash flow. It was a pretty bad earning, but that was already priced into the stock. Everybody was going into Q1 knowing it was going to be pretty bad after the deliveries numbers. And but the earnings call was the most important part, which we wanted to hear Elon talk about the 25K car, and we wanted to see, well, actually on the earnings, the margins on the cars, automobile sector, to have bottomed. So they have looked like they bottomed, and Elon did speak about the 25K car. So that got the market got investors pretty riled up, and he did really sound optimistic on the phone call, on the earnings call, and yeah, so that's it. You, Jonathan, apparently you timed that perfectly.
Yes, apparently it's true. So actually, guys, I bought Tesla last week right after the podcast. I bought it at around $140 per share, and that just happened to be the exact bottom. And now it's almost $200 a share. That's almost a 35% gain in profit. And I did make it a big position in my portfolio. I put it a pretty heavy weighting. It became my second biggest position. I went pretty heavy in it because I saw it was undervalued at 140. Like 140, I haven't seen 140 in a while. Like, how long has it been since they were at 140?
Oh my God, 140 for Tesla. I've been in the stock for like a year and a half, and I haven't seen Tesla at that price. I could go look it up now, but you as one of the biggest Tesla bears, getting into a stock saying that it's undervalued was pretty surprising, and you just saw a bunch of returns from there.
Yeah, guys, I used to be one of the biggest Tesla haters. I hated Tesla. I used to say it's overvalued. It's way overpriced. The PE ratio is almost 100. But now I scooped it up at a 30 PE at 140. See, guys, the price changes everything. It's not the company, it's the price that matters.
Yeah, and you also saw that nice pop that we had today as well, with Elon doing a surprise visit to China. Wait, let me check here. Sorry. Okay, so 2023, a year and a half ago, actually, the price went under 140. So yeah, he did a surprise visit in China. He went on a tour with some of the Chinese inspectors, and they made a deal with Baidu that they could start using FSD in China. So the market took that very bullishly, I guess, if that's a word. and you saw the stock just go right back up another, what was it, 16% today? It was up, yeah, 15.31% today. It was up at 1.20%. It's huge, huge. Since last week, the tone on the Tesla has changed drastically in 1 week. There was so many negative headlines that's been hammering the stock. There's been so many negative headlines on Elon. There's been investors, retail investors going at it online. It's been very like a toxic environment for shareholders and for the stock itself. And just having all those positive news come out, it's been very refreshing for the stock. Like if it keeps doing like that, I wouldn't be surprised for it to go back in towards that 230 level, which you'll probably be out by.
No, I'm in this for a long term investment. I don't see myself selling within the next 5 years. I see the vision of the company, and I just bought it I have a good buy-in cost, so I think my return is going
That's
to be
true.
good no matter what happens in the next 5 years.
That's true. You could take the not the risk, but you have a good margin for error, right? If it
Yeah.
does still plunge by 10%, you don't care. You still have that big cushion helping you out. That's for sure.
Yeah, and guys, be sure to stay tuned and watch all the episodes because we spilled knowledge like this every episode. If you guys missed last week's episode, you just missed this crazy jump on Tesla. So every week, watch out on what we're saying. Danny is our short-term market analyst expert, so he knows what he's talking about. Let's talk about
So on, yeah,
yeah.
go ahead.
Let's talk about next week's earnings. What's coming up next week? We have
Next,
Apple.
yeah, there's Apple reporting this week. There's also Amazon that's reporting. We're putting this podcast up every Tuesday, starting at midnight. So it'll be today while you guys hear the episode. So Tuesday night we will hear the Amazon brass come out with their earnings and their earnings call. So I'm looking forward to that one. Are you looking forward to any specific type of stock this week?
Well, I'm definitely gonna look at Apple, Mastercard, Starbucks. Hopefully, I want to pick that one up. I haven't got it yet. Full disclosure. I'm looking for it to drop so it goes like a little undervalued so I could pick it up below 90.
Uh, Wait, which one under 90?
Starbucks. It's under 90 right now.
Starbucks. It's already under 90. Yeah, I think it's at
Yeah,
88 if I'm not
it's
mistaken.
88.
Yeah, 88.33. Exactly. It's Starbucks is facing so many headwinds right now. That's what for a global stock like that, it's facing challenges in China right now. They're having trouble. They've scaled a lot of restaurants in China, but they're having trouble um, increasing their same store sales, which like they've been betting on. They're having a lot of problems with now with the California $20 minimum uh, pay. They're having trouble with unions. They're honestly facing so many headwinds. The good tailwind that they do have is they could still increase their costs, and people people will still spend money to go to Starbucks. It's crazy. You could get a $10 coffee and people like at $11, people would be like, oh, it's just $1 more. But that's 10% more for them, right? We'll see if we do hit, if there ever is a recession, I think it would be a little bit harder for them. But it's always depending on which class of people it affects, right? People that are a little bit more wealthy that don't mind spending that $10 a coffee per day, that's not really going to change their habits. Um, so yeah, there was also Meta that reported last week. Um, if we could come back to that, the I was looking through it just before because we were talking about that just before. Why did it drop so badly after beating on revenue, beating on earnings, beating across the board. Even they spent less on their Reality Labs segment, which people, well, not people, but investors want them to invest less in. They came out on EPS at 4.71. 4.32 was estimated. So they technically beat it by like 11%. Revenue came in relatively in line at 36.5 billion, estimated 36.3. Q2 guide, that's what made the stock plunge. And it's pretty crazy that it plunged that much just for this much of a miss, but any guideline that a stock has been given that is lower than the estimates have been getting massacred by 10% or more. So Meta came out and said Q2 guide from 36.5 billion to 39 billion versus the 38 billion estimated. So I think they didn't like that lower end of the estimates.
I mean, yeah, I've
So
been
this,
bullish.
yeah,
Sorry, what
yeah,
did you?
go ahead.
I've been bullish on Meta for a while now. I picked it up back in June 2022. I scooped it up for 160. I mean, that was a bargain back then. I got it for a 10p ratio, and this thing just kept going up and up and up. And I think it hit around 500 last week, and now it just dropped to like 430 because of their good earnings result. I thought it was ridiculous.
Yeah, that's crazy. It went at one point it was trading at 510. After their earnings, it was down to 410. That one day move resulted in a $250 billion in market cap loss, which would be the worst single session value loss of any stock ever. And I also think they own the first or the second, or like they're in the top. I know they have two of those, like top five, I would say, in biggest single day gainer in one day. So it's pretty crazy that they have the biggest single day loser and one of the biggest single day winners, which came after their Q4 earnings when they announced dividends, when they announced $50 billion in buybacks, which just made the stock rocket up afterwards.
I mean,
But yeah, go ahead.
yeah, their buybacks really helped the stock go up. But they're not the biggest company. Like they only have a 1.1 trillion market cap. They're up there on the top companies. But the biggest company is still Apple right now. I'm surprised they don't have the record for the biggest loss in a day for like the amount of money.
Yeah, so Apple's gonna report, I think, if I'm not mistaken, on Thursday. Their biggest trouble right now is, first of all, they're losing market share globally. Second of all, in China, they're getting hurt big time because, well, what the U.S. is doing to China, well, China is doing to the U.S., right? So everybody's backfiring against Huawei, so now they're backfiring against Apple. It's like the Intel chips, it's like the AMD chips, there's like kind of a trade war that's happening with those two countries. They're trying to keep every trade, like a lot of their information secret, which is normal. So it's backfiring on American companies and Chinese companies. Um,
I think Apple has
so,
still I think Apple still has a
and
lot of pricing power.
they have a lot of pricing power. The biggest thing is they're not innovating. You know what I mean? It's the iPhones, but you could have iPhone 13, iPhone 15. What's the biggest difference? Like the camera lens, you're getting a better camera lens. Like every time it's just a camera lens. How about the overall experience? Like you need a bigger jump into that. I know they partnered well with Google to get their AI going, but you see, like They worked on a car project. Now that's out of the window. That's not going to work out. They've been investing in billions of dollars in AI. Okay, but you're partnering up with Google to get a better AI. So it's like, what are you doing? Like,
I
there's
don't I don't think
clearly
I don't think they're a technology
and
company anymore.
Apple Vision is clearly not working out. A lot of people have been returning it. They put a stop on production this year. It's they lack vision. They need, yeah, maybe they're not a growth company anymore, but
Well, they're
I
not.
think it's time for them to move on, to be honest, from Tim Cook or from their designers. They need to do something drastically because they're not they're not doing anything differently.
I completely disagree. I mean, I don't think they're not a growth company. I just think that they're not a technology company anymore. They're more of a consumer goods company. Like, think of it like Coca-Cola. I mean, they don't really have to innovate. They just got to deliver the same product over and over again, and they could raise their price and people will still
Um,
buy it.
I'll disagree with you on that because Coca-Cola is Coca-Cola. You know what I mean? Like at the end of the day, it's a sugar beverage. But if you come out with a better phone than iPhone, like a better Samsung that's revolutionized before a new iPhone, people will jump ship from iPhone to Samsung.
I mean, if you look at the stats, all the Samsungs have better stats than the iPhones. I mean, why don't people switch?
I think you need something. You're gonna get people that are tired. First of all, they're not gonna change their phones every year, and we've been seeing that they're not changing their phones every year because it's what's the point in having an iPhone 15 instead of iPhone 13, except for the camera. There's no point. You're gonna go spend 1,000, 1,005 on a new phone that doesn't provide that much more value or use to you. So people are not buying back phones every year like they used to. People used to buy a new iPhone every year.
Yeah.
So I really think that they need new things. They have an unveil coming out. I think it's going to be about an Apple Pen, which I don't know. I don't even want to start speculating about that. If it's an Apple Pen, man, I hope it's Tim Out, like Tim out. You know what I mean?
Yeah. But
Yeah, I try
I
to.
mean, it's really hard to integrate like off the iPhone like system. Like if you have everything on your Apple ID, it's hard to. It's a big pain to switch, to Samsung.
It's not big. It's not as easy as changing from iPhone to iPhone. That I get it, but you could put in 20 minutes and you could get all your data back. You just have to save it on your Google phone, Google email. There was also last week there was Google that
Y-
reported earnings.
yeah, they did go up a lot too. Full disclosure, I do use
So
Google.
so Google had an EPS of 1.89 versus 1.5 estimated, so blew that out of the water. Revenue was 93.5 billion compared to 91.3 billion estimated, so beat that too. They announced their first ever dividend and they announced 70 billion buyback program. So they pulled a Meta and you could just see that stock blow up. So it was funny because last week when we were speaking to each other, we were like, "Hey, you're up 20%. Hey, you're down 12%. Hey, you're up 15%." So it was really
Yeah,
wild ride for you.
yeah, I was up like 15% in one day on Tesla. I was down 10% the next day on Meta, and then Google goes up 15% the next day. I mean, I picked up Google at like $90 a share. That's my average cost basis, and it's around 170 right now. So it doesn't really
Yeah,
affect me much, but it's still a big move, 10%.
but look at their growth that they're still having. YouTube ads grew 21%. Cloud revenue grew 28.5%. Their cloud operating income grew 371%. Their operating margin went from 25% to 32%. Like they literally hit on everything. They dominated everything. Even they're still growing at what is it, $1 trillion company? Is it at a 2 trillion? No,
It's at
it's
2.1
still a
trillion
trillion.
market cap. Yeah.
Still at a 2 trillion market cap to have this type of growth is insane. Insane.
Yeah, and one of the great things about Google businesses that I really like is that they don't have to put any more money to grow. You know, it just kind of grows on its own. You don't have to reinvest the earnings. That's why they're paying off so much as buybacks. They just have so much excess. They could even start paying a dividend. Like you don't have to keep reinvesting into the Google software for it to grow. It just grows as naturally as the GDP grows. You know?
You're so right. And I've seen some comments on certain apps about people saying, is it, oh, they're issuing a dividend. It must mean they're not growing anymore. It doesn't mean you're issuing a small dividend, which was how much did I say it was? It was a small fraction. You can't say that, oh, Google isn't growing anymore because it just issued a dividend. It's just going to get a new asset of investors to come into Google. They're going to be included in different ETFs, so they're just going to have more exposures to the shareholders. And some shareholders only buy dividend stocks. So now that Google has a dividend, even if it's a fraction, people are still going to be interested in owning the stock, even if it's barely anything.
Yeah, and they really have nothing else to do with their money. They have no debt. I mean, what else you want them to do other than pay it back to shareholders? If anything, it's good news.
Yeah, I agree with that.
So,
Well, you could see it's reflected in the stock, that bounce that the stock had, that I think was a 20% daily bounce,
yeah,
was pretty
the
insane.
investors were happy about it. So let's
Yeah.
transition into last week's results. Let's talk about that. What happened to the stock battles last week, Danny?
So Jonathan, I was texting you all day today telling you, eat it. I'm beating you. I was leading you at 1.8% with DraftKings, and you were at 6%. I told you literally right here. I got it by text. Eat it, buddy. Then 1 hour later, I said, "Damn it, we're tied." And 3 hours later, I told you, "Damn, you beat me." So it was
So
a pretty hilarious day. So Green Brick was up 7.36%. That was a pretty good performance, Jonathan. But I'll give myself a little bit of props. DraftKings was up 5.5%
you
this week.
did pretty good.
So
5.5% is pretty
if,
good for a loser.
so we so if we average that out, Jonathan, we did an average return this week of wait, I think 6%, 6.5%. I should
Okay.
have just calculated that mentally. I'm sorry.
Yeah.
Yeah, so 6%, 6%. That's hey, annualize that, dude. That times 52%. We're up 300% on the year, buddy. Like that's pretty insane.
That's pretty good.
But
I mean, we're no
yeah, that's
financial
pretty good.
advisors, but that's
We
pretty
are
good.
not. And if
So
we come back to our other stock battle that we had from week one, you're up on Altria 6.32%. So hey, two stocks, 6 and 7%. That's pretty amazing. And I'm up 1.33 on Exxon.
not bad. Well, so I guess I'm the winner. That means, I mean, where's the cheering, guys? Fans, come on. Oh, there it is. Thank you, guys. Our ritual cheering. Thank you, guys. Stop. It's enough. Okay, so let's transition into this week's stock battle. I mean, I'm gonna start it off because I won. I'll take the liberty of choosing a company we have never talked before on this podcast. It is a artificial wood manufacturer for decking, like for your decks. It's called Trex Company Inc. So yeah, as I just said, it's a composite decking company. They use mostly recycled materials to make decking products, and they supply stores like Rona and Home Depot. And they have been growing at a really fast rate, really rapidly, consistently over the past 10 years, and they are very, very, very profitable. One of the most profitable companies I've seen. And just the growth is amazing, and they're planning to do a 500 million reinvestment into a bigger factory to double their capacity. And I just think the tailwinds are so good for this company because, real estate is one of their tailwinds. They obviously supply a lot of real estate. And just the trend away from real wood. Obviously, there's environmental cases against real wood, and there's the case that the composite wood is more durable. It's against scratches, and it lasts longer, and it's easier to maintain. You don't have to maintain it as much. So let's talk with the numbers here. So the company is worth market cap of 9.8 billion. We have a revenue of $1 billion, a net income of 200 million, and that has been growing at a very fast pace, around 20% per year over the past 10 years. Let's go look at the free cash flow statement right here. Free cash flow of 220 million. And if we go look back at 2015, the free cash flow was 2015 free cash flow 39 billion. So 39 billion to 200 million. Very good growth here. Let's go look at the balance sheet. Cash and cash equivalents, not much cash. They have 2 million in cash. They have 900 million in total assets and only 18 billion in debt. 24 billion in total debt. So basically no debt. They could pay off their debt with a month's worth of cash flows. They only have 200 million liabilities and they have 700 million in equity. So that's basically my thesis. Danny, what are you going to do to counter this?
So yeah, I looked at Trex before. It's a solid company. I'm going with Kratos Defense. So Kratos Defense is ticker, sorry about that. Ticker KTOS. So Kratos Defense is a military contractor. So they specialize in technology, product, and solutions for national security, primarily in the United States. So they have a few segments. The Defense Solution Group, which focuses on developing and delivering advanced technology to the U.S. Department of Defense. They have an Unmanned Systems segment, which is dedicated to the design, development, and production of unmanned aerial, so ground and sea vehicles, as well as command, control, and communication system for both military and commercial applications. They're known actually for their high performance unmanned aerial target systems. So they're really used in like anti-aircraft defense missiles. They also have other segments as well. They're one of the big suppliers of Lockheed Martin and Raytheon. So they both use their unmanned aerial targets, their advanced weapon system components. They use some of their specialized electronic softwares and technology for like next gen type of weapons. They offer cybersecurity to those two as well, and training services. So right now with what's happening in the Middle East, they're getting used a lot because all these anti-missile. Every time you see that there is a drone that's been hit with an like a defense missile, that's one of Kratos's missiles that are getting used. So they provide it to Lockheed, or they provide that technology to Lockheed or Raytheon. So every time you see one of those missiles explode, it's technically a revenue that comes back to them. So they have right now record backlog. Their revenue is just growing every quarter, and it's been growing the last few years as well. They're on path of profitability pretty soon, and that's it. I don't know if I wanted to add something else about that.
That's it. I
That's
mean,
it. Well, they exploded last week also on the charts. I would have loved to give Kratos before that happened. An analyst at Raymond James, so a pretty serious firm, came out and gave a price target of, well, gave it a strong buy and gave it a price target at 27. So right now it's trading at 18, if I'm not mistaken, 1830, I think, if I'm not,
yeah,
in the
1866.
18s. 1866. So I bought some more. Full disclosure, I do own the stock. Full disclosure. I do own the stock, and I bought some more at 1720. So just before that pop last week. So it was pretty crazy. I do think it's gonna keep that momentum going. I think technology is going into more of that unmanned type of environment, and they're leading in that type of technology. Go ahead, John.
Um, I mean, like these type of companies, I never really like to invest in them. Military companies or healthcare companies, I just think they're too corrupt, and they don't operate by market forces, if you know what I mean. Like, I mean, anything could happen. Like a Democrat or a Republican could win the next election, and then they lose their contracts. I mean, it's not related on their skills or marketing skills. It's up to the air.
Well, they do have government contracts, obviously, but they not only that they do have government contracts, but they do deal with two of the biggest U.S. companies
Yeah.
as well for weapons, right? So they're not just depending on those contracts coming in; they're really depending on those bigger, like Lockheed and Raytheon to actually keep buying their stuff. So I honestly think Kratos might be an acquisition um,
Target.
target. So I think maybe Lockheed or Raytheon might go up and snatch them. So that's my obviously everything that's happening in the Middle East, but I've had this hunch, and I'm telling I'm with the technology that's going towards them, they're already supplying them for all those missiles, so why not just acquire them full out? They have what a $2.9 billion market cap. How much is Lockheed Martin right now as a market cap?
I don't know, but I know Raytheon's around 100 billion.
Exactly. So you're talking about 2%.
Yeah.
Give it a premium, let's say 3.5. Yeah, that's it. Lockheed is 110 billion. We're talking about like less than 2% of your own market cap to acquire that company that already supplies you. So not why not just straight line it? Um, yeah. So I think it has a lot of growth potential. My cost basis is around this $18 as I've been buying it since January. It's probably around 5% of my portfolio right now.
Yeah, you guys heard it here first. If this stock gets acquired by Raytheon or Lockheed Martin, you heard it here first. Danny said it. We're gonna clip that and put it all over social media if that happens.
You know what? That would be pretty sick. Because last week I did call out that Tesla earnings, and it did happen. The
So
only thing
far,
I've said was the oil going in the 90s. It hasn't happened yet. We're waiting for Passover to be done, and then we'll see.
yeah, so far your predictions have been coming to fruition. I mean, I think that's a good place to end it off. You have anything else to say to the viewers?
I do have something to say. Good luck this week in earnings. Don't try to gamble on earnings. It could literally go any side. Like you saw Meta, they beat earnings, but just their projection wasn't as strong and the stock tanked. So don't buy, I would tell you don't bet before earnings. See which way it goes and ride it from there. If you're long term anyways, you'll be okay. but I would write it from there. So you could at least not get that shot down. You protect your downside by doing that. That's what I have to say.
I would disagree with that. I'm more of a long term type of guy. I don't really dabble with earnings gamblings, but I just look at the fundamentals and just buy the stock based on the long term numbers, and I don't really care what happens in the short term fluctuations, But if you made it this far, guys, please be sure to leave a like, subscribe, comment, everything you could do, whatever platform you're on. This is on Spotify, Apple Podcasts, and YouTube. So please support. It'll really help us out. Thank you guys for watching.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you in the next time.